Ahoy there, traders. Good morning, good morning, good morning. So, right on the turn of the hour, welcome one, welcome all. And as usual, thank you for taking a moment out of your day to spend it with me on my day. So it is greatly appreciated. Time is the most important thing that we can gift someone. And I just want to thank you for giving me your hour. So let's see if we can fill it with something interesting. We're going to be reviewing green light trading. It's just a term that I'm using to, like, how do we find something to trade today? That's what we're going to be going through in just a moment. So that's the general theme of today's section from the educational point of view. And as you can appreciate, it's more practical. So hello, Bal. Hello, Glenn. Glenn, great to see you again. Marco, Vito, as always, you're at the bottom of the list, my friend. It's not your fault. Your name begins with a V. So nothing personal that you're last. If I've not mentioned your name, don't worry about it. Nothing personal. So with that said, and without further ado, let us jump in. The usual agenda is 20-30 minutes. We're actually going to spend most of the session going through green light trading. So it's going to be 1 and 4 combined, along with the market review, 1, 2, and 4. So it's going to be all kind of blended together. We've got a few trades this week to review again, which is awesome. So we'll do that in just a moment. However, if today is your first day, I can see there's a few new names coming into the room as we just get started. We're just talking about the agenda. Hello, Rodrigo. Hello, Scott. Hello, Brian. Hello, Duncan. Again, if I'm not mentioning a name, nothing personal, I'm just skipping down the list, picking a few random names. So this is our usual agenda for the day. We're going to be looking at green light trading. We're going to find something to trade or potentially trade today. At the very least, I'm going to show you a footprints for how you can find green light trades. One of the things that I do like to do is not try and spend so much time looking for things. So we're going to look at maybe a good example of what we're looking for, and then we're going to go and see if we can find it. So that's what I mean by footprints. We figure out what's the end result. What are we looking for? And then can we go and find something that meets that criteria? So that's what I mean by green light trading. It's a green light. Today's the day. Maybe it's tomorrow would be something else. I think if today's your first day, I'm not a Wall Street guru. I am someone who figured things out. I figured it out very quickly. What I like to do is create, I refer to it as a production line. I want to be able to replicate what I do. And not just for my own purposes, it turns out that you lovely people can replicate it as well. I'm typically what most people refer to as a lifestyle trader. My idea of a lifestyle is not sitting on a beach. I'm not going to give you the bullshit of it's a laptop lifestyle and blah, blah, blah. And all. Life's whatever you make of it. I like a nice relaxed pace. There's lots of reasons. I'll give you the long sob story on another day. You've all mostly heard it. But I just like to enjoy myself. I like to take a nice, slow, lazy pace of life. I want to check in, check the charts, pop a trade on, and then check out. That's what I mean by lifestyle. I trade around my life. I don't have my life around trading. It turns out that that's also a great way for you to do this around your other daily commitments, whether it be work, whether it be life, whether it be, again, other things. So my name's Phil Newton. I've been trading full-time since 2001, hand-drawn charts since the early 90s, calling all my trades out. And I've got to admit, at the moment, nearly all my trades out. Sometimes it's just impractical to call every trade out because sometimes they happen super fast. I have managed private client funds with $10 million assets under management. Spent 12 years specializing in Forex, primarily day trading. And I've also done stock options over the last 20 years. I currently specialize in stocks and stock options. I mentor and coach people. I've done thousands of people around the world, from hedge fund owners, banks, institutions. The one thing that does remain constant is, like, I've got a lot of time for serious traders. If you're serious about learning, I'm serious about helping you if you need it. Not everyone needs it, but sometimes people need a little bit of extra help. And if you are one of those people that need some extra help, then yeah, we can talk about that another time. So let's go back to, where's my agenda? There we go. So let's go back to our agenda. Let's review some of the stocks that we've done this week. We've had a good haul. It's been a little bit of a mixed bag of trading there, to be fair. Primarily focusing on the day trades at the moment. I'm finding that I'm seeing a lot more opportunities on the super short term. All of this can be done still in 1 to 2 hours every day. We've got some great successes on the Facebook. This was Monday. There's my broker statements. What I'm going to start doing, just because it's going to be easier for you to kind of put your situation in there. So I'm going to be focusing and rebasing my trading in relation to $250. And then you can pretty much scale up or down relative to your situation. So all these numbers are based on $250 risk. Again, if you've got $1,000 risk, times it by 4. If you want to divide it down to $50, divide it down. It's just making it easy for everyone to work out their personal situation, because your situation is different to mine. So it's just a model performance is what I'm trying to demonstrate here, so that you can fit into your situation. So Facebook was a good haul. We had a great trade on Monday. We got the week going, which was awesome. Tuesday, and again, another trade on Facebook. Didn't quite go the way that we wanted to. So again, we took a small loss. And you can see the same pattern that we look for. We're actually going to look for this pattern on the daily charts from a swing trade point of view as well. AMD was also a small loss. You can see that again, the pattern setup, sometimes there's just no follow through. I gave this as much of a crack of the whip from the timeout. The TTE management, timeout, target out, exit out. So this is something that timed out and also exited out at around about the same time for me. So very little we can do about it. And then we had a great haul on Square. I think most people got a good haul on Square. Everyone was on that. There's a few other trades that some of our students got, which is awesome. But not everyone got, again, DocuSign was one of them that was traded. I personally didn't trade that, but some of our students traded that in the week. So I'm talking about, I do like live sessions around this time every day. Over the shoulder, we're looking to profit at the open with some of these trades and basically just trade the momentum of the morning. And that's what we're looking for. And you've seen me hunting for these opportunities. We're going to go and look for some of them now. How do you find now trades? And we're going to do it in 2 ways. We're going to look for now trades from a day trade point of view, and we're going to look for now trades from a swing trade point of view. So how do we find those opportunities? So there's the haul for today, this week's trades. We've had, again, net positive, kind of mixed if I'm going to be honest, but on the balance, we're net positive on the week so far. Still got today's trading to go, so hopefully we can push that over to something a little bit more interesting than a kind of mediocre week, if I'm going to be fair. So green light trading, what is that all about? As we've just said, it's all about finding today trades. Now, we could be looking at day trades from a day trade point of view. Where's my little thing? There we go. So day trades, we're looking for things that are interesting. One of the things that I like to do, and what we've been doing from a day trade viewpoint, is trying to find, again, gapping stocks. Are they going already? So what a gap is where price, let's just say on this chart here, price is up here. I'm just exaggerating it. It gaps open down here, or it could gap higher. Off the top of the charts. And that's all it is. From yesterday's close to today's open, there's going to be a gap. I've got the 5-minute chart here on the bottom left, and you can see the pre-market and the post-market from yesterday. We can see that like price finished its trading there, and it's going to open up about $5 lower. So this is what I mean by a gap. It closed yesterday here, and it's going to open probably somewhere around there. And everyone's got access to the pre-market data. If you've got live market access, the first tier of access, it's like $3. It's inexpensive. You should have access to, all you need to do is change the setting on your chart, and you'll be able to have a look at pre-market data. So this is one of the things that I do look at. Amongst many other things, we've spent a bit of time looking at them. But yeah, we've got a big percentage gap, and we've got huge pre-market volume. There's 200,000 shares traded. We've got about 20 minutes before the market opens. And already there's huge volume on, and this is QCOM for reference. So this is a great candidate that's going to be good for my day trade potential. So we've spoken about this in the past, and there's lots of other things. Again, another kind of one that catches my attention, and you can just see Tesla. Tesla's like racking up the volume as if it's like a pinball machine on going for a high score. There's a lot of activity on Tesla at the moment, 700,000 shares. Normally, Tesla does about 400,000 to 500,000. That's kind of normal for Tesla at the moment. So when you're looking for this, we don't have to look at I mean, I've got 50 stocks in view down this list. I don't have to look at all of these. I'm trying to like cherry pick what's the best possible candidate for me to trade today. And again, for the last several weeks, we've been doing this live every Friday, and this is again a great candidate. So Tesla normally does good volume in the pre-market. It's jumping about 2%. Again, for Tesla, that's not that much, but it's still gapping. But what is interesting is that volume. So that could be really interesting. Could be a really interesting. We could be a gap and go type of situation. And that's what we're looking for, a gap and go. Same with QCOM, it's gapping 3.5%. There's 200,000 shares traded so far in the pre-market. So why is this important? Typically, institutional traders are trading in the pre-market. It's usually, even for experienced retail traders, they're not normally trading. And even if they are, it's 100 shares here, 50 shares there. There's very little volume to be had normally in the pre-market. So most retail traders don't bother, and that's okay. That's okay. So when we're looking at those big numbers in the pre-markets, and again, we've got lots of candidates at the moment because of all the weird stuff that's going on. We're seeing a lot of instances where we have 100,000 shares traded in this pre-market. So the fact that QCOM is 200,000 shares, that's probably institutional trading. It's almost exactly 200,000 shares. It's probably institutional trading. Same with Tesla, 750,000 shares nearly in the pre-market. Again, normally it does 400, 500,000. That's kind of normal at the moment. And if you watch this for any length of time, that's what you'll see. Now, this is again part of one of the scans that I do for day trading, but you can use this for swing trading as well. We can use the same scan for swing trading. We can look, let me say it again, we can look for the same scan for swing trading. So you can monitor this in the pre-markets and say, okay, well, these look interesting. Now, if you've not got the time to day trade, that's okay. That's okay. But if you have, you can take advantage of some of these explosive morning movements, the explosive potential. But what if you want to kind of get a swing trade on it? You want to have a trade for a few days, maybe a week or two. So what we can do as well is we can look for that same footprint. And let me just look at, again, we're looking at QCOM. So if you want to look at this in your own time, you can do. So we're looking for the same sort of pattern that we were just looking at. Let me just get that and then zoom in. So we're looking for the same pattern. So I'm going to show you what it's looking like after the fact. There we go. So that'll do there. So what's it looking like after the fact? Okay. Let me just put that center. Okay, so nice and center. So I'm going to center of the chart is there. I'm going to be looking left. So that's kind of like before and after. So we can find so again, we've looked at this footprint for day trading briefly just now. The last several weeks, we've been looking for these like interesting opportunities for, again, day trading. Again, my focus primarily is very short term at the moment. Again, it doesn't mean that I'm doing anything else, doing anything different. But as we were just alluding to, it's like how do we find interesting things to trade? How do we find those green light trades? And how do we find them, not just from a day trade point of view, but how do we find them from a swing trade point of view? So the first thing I want to kind of point out, I'm going to show you before, I'm going to show you after. We're going to show you what does the setup look like in, the completed picture. And then what we can do is how do we find the same trade in the before states, because we want to try and trade it to the after state. Again, I know that seems pretty obvious, but we want to know, what does the end result look like? What does think about this like it's my, if we were going to have I like to use the production line experience. So if we're manufacturing a widget, we've got blue widgets that we want to manufacture, we're going to get a single perfect example, a model. What's the model example going to look like? Okay, this is the completed version. This is what we're looking at. This is the completed version. So what we want is how can we find these trades in the before states? so that we can get to the after state. But we need to know what it looks like afterwards. And this is the footprints that I keep talking about. Foot, it's a P, there we go. Should have learned how to write and spell when I was younger, but there we go. So we're looking for that completed picture. So the first thing that we want to look at is we have this, there's the gap that we were just looking at on, there was about a $3.50 gap that we're looking at in real time. But let's look at historical. So we've got a gap here. Can everyone see the gap? Again, I've tried to zoom in, but we have the gap here. So that's like this first step of this process. Step number one, do we have a gap? That's what we've just done. We found it on the live part of the chart. We can do this for swing trading. So you can create a short list of stocks. These are all stocks that have gapped 2, 3, 4, 5%. Cool. That's awesome. That's step number one. Just let me know you're still with me, folks. I know I'm kind of going slow here. We're trying to find gapping stocks that we might use for day trade, but then we're also going to evaluate them for a swing trade. So step number one, it's gapping. And then we want to go, okay, is it gapping past support or resistance? So step number two is, do we have a break of support or resistance? SR, support or resistance. Step number two. Again, I'm trying to create a production line. I'm looking for, if this is my gold standard, this is the picture perfect example that's out of a textbook. This is what I'm looking for. So I'm breaking it down. Has it gapped? Yes. Step number two, has it jumped past support or resistance? We might have a bonus factor of, okay, and it's in an uptrend. Again, not obvious. We can only say with hindsight it's in an uptrend, but at the very least it's jumping out of this range, this consolidation. And the prior chart was bullish. Optional number three is it was in an uptrend. So it's in an uptrend at long term, consolidating over a month and a half, 2 months. So we've got a longer term consolidation. Then it's gapped. That's why number one is why we were looking at this chart in the first place. So that means that it's a mechanical reason to be looking at this particular chart. It's not an automatic trade. Again, we can trade it day trading point of view, but I promised you a swing trade. We can use the same approach. Step number one, find a gapping stock. Step number two, find it jumping past a resistance point. Then what we want to look for is step number three is we want to trade the pullback. I like to trade pullbacks. This is going to give me a little bit of a rest. That's all that is. So you can just see we've got big day, gap, thrusting move, and then we've got the pullback. Can everyone see that? Give me a little yes. We're all on the same page, Phil. Just let me know you're still with me. I'm going through this fast. Am I going through this fast or am I going through this too slow? Let me know. Awesome. Cheers, Glenn. Thanks for your feedback. Rodrigo, perfect. So again, we're looking for footprints. We're looking for now trades. So when we have that pause, when we have that pullback right there, it's the same pattern. And for a lot of my over-the-shoulder traders on our live room, you'll see it's pretty much the same thing that we're looking for on a day trade basis. We just looked at lots of examples of this on a 5-minute chart. That's the first thing that we did. We reviewed this week's trades and we saw pretty much the same pattern. Gap, price moves in the same direction as the overall trend and then just pauses briefly. Now, as step number 4, trade the pullback. Trade that bad boy. Trade it. Entry above the pullback high. That's it. And you've got choices then. You can just trade the momentum. 2, 3, 4 days. That's a $5 move. Just look at the scale. 110 to 115. Oh, my apologies. It's a little bit low. It's about 107. I'm just approximate about 107 to 130. It's still a $5 move. So that over 3 days, it's $5, pretty much straight line. And if you're holding for the swing, maybe you want or a longer swing, maybe you want to wait for multiple day retracements, and that's okay. Trade the pullback. Rally retracements, trade the pullback, rally retracement, trade the pullback. If you can trade each of these, depending on, what's going on, but this is our footprint. This is our footprint. So this is what the completed picture looks like. Is everyone happy with the completed picture? So there's our reference points, left, right. So let's break it down. How do we find these trades? How do we find it at the before state? Because it's no use to us in the after state. Easy to find these trades after the fact. How do we find them in the before state? That's what we want. In fact, let's throw the question open. Let's throw the question open. How do we find these trades in the before state? How do we find these trades in the before state? We're interested when that's happening. So everything to the left of that is before. How do we find them in the before state? It's a good question. Glenn's saying it's a good question. I know it's a good question. I've even got the answer for you. How do we find trades in the before state? This is the trick of it. This is the completed picture. Completed picture is dependent on your trade management. You've got some measure of that move, either 2-3 days, 2-3 weeks, 2-3 months. You've got some measure of dollars. Your money management part of your strategy. I refer to it as time out, target out, exit out. Your TTE management, which is what I refer to as, that's my production line for the management side. That'll tell you what you're going to make. That's afterwards. That's no use to us if we're not in the trade. So how do we find before trades? Again, give me a few answers. Give me a few suggestions. Let's throw it open. Again, it's not a trick question. I'm just curious as to, like, what are your thoughts? How can we find this? What's a mechanical footprint? What's a mechanical footprint that we can use? What's a mechanical footprint that we can use to put this in our production line? High volume, good, high volume. Yeah, that's a great, so observation. Cool. Awesome, Glenn. So one big factor, the yellow line here is average volume. So one of the footprints might be volume. So you can see that, okay, on this occasion, big volume. So it's so 10 million shares is average, 10, 20, 30, 40. This is 4 times the average volume. So that could be a really big clue. That could be a mechanical reason to look at the trade. Has there been 2, 3, 4 times its regular volume on that day? That could be a footprint. I've already told you one way of finding this, the gap. A mechanical reason to be looking at this is going to be gap to volume. It was the first thing we spoke about today, volume. So we can look for gap, we can look for volume. And these are all in the before state. Again, remember the thrust move, the pullback bar, they're all in the before states. So we want it in the before state. So gap and volume in the before states. Is there anything else? Yeah, absolutely, Glenn. That's spot on. That potentially could be institutional buying. Again, I can't say for certain. We'll only know afterwards whether it was or it wasn't. But you know what? 40 million shares, that's not retail traders. Collectively, globally, that's not retail traders. We do not move the markets. But that is a good footprint. So is there anything else that we can look at? We've got, number 1, we've got a gap. Number 2, volume, as per Glenn. Is there anything else that we can spot that maybe could we scan for this? So volume, times 2, times 3, times 4, these are all possibilities. Gap, greater than 2%. What else have we got? What else is in our footprint? What else is in our footprint? What else is in our footprint? Give you some clues. What else is in our footprint? What else is in our footprint? Everything else is a lagging resistance. Yeah, so we're not actually, I appreciate what you're saying there. Glenn's further commenting, like everything else is lagging. Yeah, we're not using indicators. I mean, we could look at moving averages, sure. That's just telling us what price is doing. So you're right, indicators are lagging. It's just going to confirm what we might already see. Trend, yeah, absolutely. Trend could be one. So before we look at the chart, so let's split it down. So before we look at the charts, we can scan for a gap. Before we look at the chart, we could scan for volume. But when we're looking at the trend, when we're looking at a break of resistance, that's going to require a visual confirmation. It's going to require a visual inspection. But first of all, we've got two absolute bare minimum requirements. We've got a gap, we've got volume. Great. So I would refer to this as my mechanical scan. So mechanical, I need a gap, I need volume, and then a visual inspection. So step number one. So let's think about our production line. Step number one, mechanical scan. Step number two, visual inspection. So is it breaking support or resistance? Do we have a trend that it's gapping in the direction? So same as the trend. Are we breaking through resistance? But that requires visual inspection. So mechanical reason to look at a chart, visual inspection. And then step number three, if everything's there, let's look for our setup. So step number three is we're looking for entry. And step number four on my production line is trade management, timeout, target out, exit out. So we've got 1, 2, mechanical. We can scan. The entry is mechanical. We've got a thrust bar and a pullback. So mechanical entry is a pullback. So again, but we need to visually inspect. So step number 2, this is where we would look at the chart. So we're back to the first step is mechanical reason to be looking at the chart. Does it have a gap? Does it have good volume? Great, it does. Right, let's see if we can find a visual inspection. So we're going to have to visually inspect for support and resistance or trend. We can mechanize this, but just for the purpose of speed, just for the purpose of keeping this session a little bit quicker without going into how we can custom code, because if you're programming savvy, then you can code those things up. You can use tools to assist and speed up that process. It's not essential, but we've got our footprints. Is everyone happy with the footprints? We've got what we're looking for. Mechanical scan, and then we want to visually inspect. So we're going to visually inspect here. If those two are in place, then we can look for an entry, wait for the entry, wait for the pullback. There's our pullback. And then trade management, whatever your rules are, to capture some measure of that movement for your timeout, target out, exit out. You know, how much money we're going to make, how much money we're going to risk, how much money we're going to make. So is everyone happy with the process? That's our production line. Let me know if you're happy with that. Let me know if you're happy with that. Cool. Awesome, 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 awesome. Perfect. Right. Let's go and look at it. How many days are we looking at? From the management point of view, the TTE, timeout, target out, exit out. Depends on what your objective is. You know, if you're looking just for a quick points, your trade management might be trail it behind the lows, or you're just looking for the same depth of movements. You know, you can manage this in a multitude of different ways. What you do from a time point of view in the trade, it could be 20 hours, it could be 20 days, it could still be 20 minutes. What you do is relative to your objective. We can go into a little bit more. We're off. We can go into a few more details on this, Rodrigo, in our private sessions, in our group session later, if you want. But yeah, it's relative to the situation. Yeah, it's going to be independent and unique to your situation. Again, it's a little bit beyond our sessions right now. So for right now, we've got the gap, So the gap is down right now, QCOM. So we've got the gap, but it's can we all agree that this gap here, it's out of context and it's not like our footprints over here. So there's our footprints. Does this gap now look like that gap there? Does the gap now, does the bit on the right look like the bit on the left? That's our footprints. Does it look like this? Yes or no? No, it doesn't. Okay, great. So it's not the right gap. So we've got the gap, it's just out of sequence. So this is where we'd say step number 1, do we have the gap? Yes. Visual inspection, it's out of sequence. So step number 2 is our visual inspection. It's not gapping past resistance. If anything, it's gapping down. We might have a buy the dip opportunity, but it's not this pattern. It's not this footprint that we're looking for. So it's out of sequence is the important part. Out of sequence. Let's go and find something that's in sequence. So how do we find them? How do we find them? Now, when you first start doing this, the first few days that you do this, the first maybe week, maybe 10 days that you do this, you're going to find lots of, oh, there was a trade right there and the trade was last week. There was a trade right there and the trade was last week. That's what you're going to find. And that's okay, because the following week, the following 10 days, because you're looking at the opportunities, they're going to start to develop. So it's one of those, it takes a few, especially when you swing trading, it takes a few days to seed your watch list. And there's going to be lots of things that have set up that have missed. So the first thing is the gap. So step number 1, let's go back to gap. We could certainly look for volume. I could look at volume. I personally think looking at volume requires looking at the volume now to the volume average. I think it requires a little bit of inspection. Depending on the tool, you could certainly mechanize the volume, and you can look at relative volume. Like, is the current volume like 4 times, is there a volume spike? There's tools that will do it. TradeStation does, but I appreciate not everyone has the fancy software. So I'm going to take the volume scan off the table just for the moment. You'll pick that up on the visual inspection. So step number 1 on mechanical scan is going to be gap. Do we have a gap? Do we have a move? Now let's see. So what I've got here is can everyone see this column? Perfect, Markham. mRNA gapped up. Perfect, yeah. So all of these stocks here have a percentage. So this column for me is the way that I've got it set. It's looking for the percentage change over 2 days or 3 days. You can set it to any number you want. I've got mine set to 3. So it's going to help me find stocks that have moved a big percentage. So I can certainly look for stocks either just before the open or just after the open, because we're 4 minutes into the day. And I can say, okay, well, is there any stocks that have a big gap? And you just saw me do it, percentage change. And I would say anything over 2% minimum is going to be of interest to me. So anything that's moved, so Disney, we can see right at the top. I don't know if anyone's seen the news. I know there's 8% higher at the open. We've done nearly 6 million shares already. We normally do about 10. So it's looking like in 4 minutes, we're halfway to our average. That could be interesting. It's a mechanical scan. And we've got that gap requirements. It looks like we're going to have volume. Again, we don't need to make decisions today. Don't need to make decisions today because we're going to swing trade. For a day trade, this is going to be on my day trade list. It's going to be on my day trade list. So just looking back through Disney, I can see a gap there. Thrust, pullback. It doesn't have to be a 1-day thrust and pullback. I suspect that we're going to see Again, we've got a gap back here. I'm just reading the chart. I'm looking back at the big gaps, if there are any. So this one here, that meets our requirements. It's gapping past resistance. Cool. So a bit of a gap. It paused. Now it pulled back. Can everyone see that it pulled back for a few days instead of just one day? That's okay as well. That's okay as well. I like to use the pullback high. So we can still get in a few day trend. Again, 1 day, 3 day, 5 days. That would be cool. That's fine. You can still get the trend. So we've got a similar situation here. Just trying to read the chart. Big gap. Big gap. Now it's in the context of the trend. So I suspect that we're going to see something similar to this one. It's going to gap higher. It maybe is going to trade lower for a few, 1 to 3 days, and then potentially start turning around. So I'm going to put this stock on my watch list for not just the day trade, but also maybe this is going to be a good swing trade, but it's going to take a few days to set up. Does everyone see that? So step number 1, mechanical reason to look at the charts, gap. Step number 2, visual inspection. Oh, it's in this case, it's in context with the trend. There's no real breaking through resistance. It's already done it over here. So this is in context with the trend. And then step number 3, oh, I've got to pause it on my little production line. I've got to pause, trade the pullback. The pullback's not developed. And applying a little bit of common sense, I'm probably going to be looking for something like that, because that's what happened last time. It did a big, big, big gap as a percentage. Maybe it pauses for a few days, retraces for a few days. So maybe we see that same pattern develop again, because it's unique. Well, it's not unique, but maybe it develops in the same way. Can everyone see that? Can everyone see that? So that's what needs to happen next. So we've found our before. Can everyone agree? We've found our before states. We've got the before states. We're now waiting to see if it develops the entry states. The step number 3, is it going to give me an entry? I don't know if it will or it won't, but I've got several days to not worry about it. Quick slurp. Perfect. Thanks for your feedback. How does it feel, folks? Are we all on the same page? Is this looking good? Glenn, thanks for your feedback. Howard, new name on the list. Is this making sense? What about you, Marco? How's this looking? Does this make sense? How do we find today trades? This is how we do it. So one way, net change, we can often find the gaps before the market opens. We looked at that a moment ago. You can often find the gaps as the market opens. Again, now JD's on the table. Look at that. It's just jumping from nothing to 3%. But now we're looking at it. It's not really a huge gap. It's not really exciting. Let's go down the other direction. So we've got QCOM, 3%. It's gapping down. We already looked at this. It's gapping down, but it's out of sequence, out of context. So what we can do is we can go and look at the big percentage trades and go and see if there's anything interesting. Again, very quickly, if you want to look at several stocks quite quickly, we can go and look at the gapping stocks and just press enter, enter, enter. Oh, there we go. Number 5. Johnny, number 5. There's our gap. It's gapped from there to there. Can everyone see that this is gapping below support? This is a stock that predominantly doesn't look like it does anything major. But can everyone see the gap? Can everyone see the gap? Cool. Tried to do it last time. Maybe we get a repeat event. So what I'd like to see for a swing trade. Now, in fairness, that pretty much came back into the range quite quickly. So for a trending and a breakout setup, I want to see at the very least a wide range bar that looks like that, wide range bar. And then I'm going to look for that narrow range bar. That's the absolute minimum pattern that I want to see. Let me just color it in. I'm looking for a wide range bar. And then as an absolute minimum, that'll be the first of that. This would be the earliest pattern that I could see develop with this. Now, it might be that price moves down a few days. It moves up a few days. And that's okay. And then it might start to carry on going down. That's okay. It might develop something like that over several days. that's okay. But absolute minimum, that would be the first possible time, the earliest possible time that I could see that setup. The color of the stock is in green. Color of the stock is in green. This is, my apologies, SNY. My apologies, SNY. Sanofi Aventis. It sounds like a spell off Harry Potter, doesn't it? SNY, Sierra November Yankee. Perfect. So that looks like a great candidate. Again, right now, this is a great day trade candidate. I could drop down to lower time frames. I can look for a trade setup in the usual way that we normally do with our day trades. And I can look for exactly the same setup on the daily charts. Exactly the same, whether it's a 5-minute chart or a daily chart. This is the 5-minute chart. This is the daily chart. I can look for the same setup on any time frame. Feel like I've just pulled the curtain back on the Wizard of Oz and done a big reveal. But I can look for the same setups, the same patterns. So that's one way of doing it. Percentage change, find the gapping stocks today. I'm doing it anyway for my short-term trades. So then the second way, as I started to mention earlier, is to use this column here. This is percentage change. Now this is percentage change. And what it's doing, it's looking back. I've got mine set to 3 days. So it's going to take the open of 3 days ago and compare it with the close or the price right now, the close of today. So the open of 3 days ago versus the close of today. So that's what I've got. And this is just called percentage change. I can set it to any number of days. If you want to look back over 10 days, 20, 50, I've got mine set to 3. You could do 2, you could do 1. You could do anything is all I'm trying to say. I've just got mine set to 3. So now we can find maybe there's a stock that's not gapped. Maybe it's traded. Maybe it's traded up. Maybe it's traded down. So what I've done now is I've sorted, double clicked, and over the last 3 days, IONS, number 2 there, IONS, it's down 9% in 3 days. Can everyone agree that IONS or a stock moving 9% in 3 days, that's kind of a big move. Kind of a big move. Let's take a look at it. 9% in 3 days. There it is. So we don't need to worry about the gap. It doesn't have to gap. In this case, it's traded down. We can look for the same thing. It's traded down, but can we see that it's not yet broken support? Not yet broken support. So number 1, big move. Found another mechanical reason to look at a chart. So now we've got step number 1. We've got gap or percentage move, percentage change, and I've got 3 days. So step number 1, gap or percentage change. Same process. 2. Has it gone, visual inspection, has it gone through support? No, it's not. It looks interesting. Now, when was the last time it did something similar? Well, we can start looking at this stock to see if it conforms with our expectation. There's the big moves. These are the kind of, so it's done twice there, a little bit messy there, but it needs to break supports before we're going to get interested. It's not there yet. Wait for the breakthrough 45, break of support. We're looking for, so what needs to happen next? Break of support. Red candle. And then I'd like to see the earliest possible time would be a narrow ranging bar. That would be the earliest possible time. That's what I'm looking for. It's not happened yet. Put it on a watch list. Come back tomorrow. Put it on a watch list. Come back tomorrow. So one more time. Put it on a watch list. Come back tomorrow. So CBOE. excuse me, 6.7% CBOE. 6% in 3 days. Step number 1, mechanical reason to look at the charts. Step number 2, visual inspection. Oh, going down. Oh, it's not the best trend in the world, but it's moving lower on multiple days in a row, at least 3. And again, I'm looking for a resting bar, pause, or retracements. Little bit of above average volume over the last few days. So we've got our visual inspection of the volume this time. So it's looking interesting. Trade the next pullback. That's what I'm waiting for. It's not no, it's just not today. I've got step number 1 done, step number 2 done. I'm waiting for step number 3, which is I'm looking for my entry. It's not no, it's just not today. Put it on the watch list, come back tomorrow. Does everyone get this? Does everyone understand how we can find something to trade relatively quickly? So let's just go through. All I'm going to go through is top 14 stocks over the last 3 days. I want to go through them fast. It takes longer to explain than to actually do. So I've got 10 stocks to look at, or at least 15. I'm just going to press enter. Like out of sequence, move on. I'm looking for a big move. It's in a range. Don't worry about it. Move on. I'm looking for break of support or resistance. This looks like a nice trend. Buy the dip. Again, it's not doing anything that we're expecting. I'm looking for the thrust moves, the directional moves, the red candle, red candle, red candle, green candle, green candle. I'm looking for that sequence, or I'm looking for a big gap. It's not doing it. It's just not doing it. HSBC, this has got multiple listings. It's a gappy, spotty chart anyway. Leave it alone. Again, I'm just looking for those big moves or big gaps, big moves or big gaps. That's what I'm looking for. Big moves, no. Big gap, no. Big move, no. Big gap, no. Big move, no. Big gap, no. Can everyone see what we're doing? It big move. I'm looking very specifically. Step number 1, big move. Oh, actually, here we go. Hello, love. Break of support there. Small, short-term consolidation. It's starting to move below our range low. Number 1. Percentage move. Step number 2, visual inspection, breaking supports. Can everyone see that? Breaking supports. Where could it get to? A little bit of a speed bump there. Look down and left. Maybe it gets to there. Okay, so 206 to 190. That could be interesting. So 3, wait for a pullback. That's what I'm waiting for. I've got a thrusting move. It's going through supports. This is a DG, Dollar General. It's nearly there. I'm waiting for step number 3. Put it on the watch list, come back tomorrow. Again, it's a swing trade. I don't need to do anything today. So your first day, your first 2 days, your first 3, 4, 5 days might be, I'm just building my watch list. I'm just building my watch list. Again, I'm looking for gaps and gaps and 3-day moves, gaps and 3-day moves. It needs to be breaking support or resistance. There we go. So we got BBY, BBY. Break of support, break of another support. There's the trend. A little bit of a pause, pullback. We're waiting for the setup. So a little bit after the fact, would you trade this? Arguably, you could say it's counter trend. Short-term range break. We've got the breakouts. We've got the pullback. As it goes through $100, big psychological round number. Again, I'm going to trade the next pullback. The next pullback. So wait for a brand new setup. I could trade the last one. It's only a few days ago. Friday. Let's not worry about it. We're going into the December quiet period. We've probably got another 5 days of good trading before the Christmas lull. So I'll probably wait for the next pullback. Don't worry about the last one. Trade the next one. So this looks good. So from 100 down to 90 is where I think this could go to. Just look down and left. Maybe we get the gap fill. So BBY looks good. Looks interesting. It's not it's not today, but it's definitely come back tomorrow. Tomorrow in this case is Monday. But can everyone see like how quick you can go through 20, 30 stocks very quickly? I don't want to flick through every chart every day all of the time. I just want to flick through the most likely stocks today some of the time. Edits is, again, big move. Look at that. We've missed the boats. This is when you don't trade. Good example of don't worry about this one. It broke through resistance at $40. We're now at 65. This is overextended. I'm not going to trade this one because I've missed the ship. The ship has sailed. If I'm going to trade this, I want to see it rest for a few days. I want to see it do a little bit of a deeper retracement. I've missed the boat on this one. Just the nature of, we're not going to get them all. We're not collecting Pokemon cards. We're not going to get them all. So this is one I'm going to have to let go. I don't want to be the person that's buying the high of the move. Now, it may go another $50, $60, $70, $80. I don't know, but I'm just trying to stack the odds of success in my favor. So this is up 19% in 3 days. Again, this looks good. There's the, we've had we've had the gap. There's a gap and go. We've had multiple gap and goes. Gap, deep retracements. This looks good. Could be a new setup. Could be a new setup. EOG resources, EOG. That could be interesting. It's not today. Wait for the next setup. The setup's probably going to happen today. Come back tomorrow. In this case, it's Monday. EOG goes on the watch list. So the first few times you do this, you're going to build your watch list, Again, looking for rally retracements. I'm looking for gaps and rallies, gaps and drops, gaps and rallies, gaps and, well, actually, we've got both here. LLY, there's the gap. Consolidation, sloping, breakouts. We've got the breakout. Well, we've got a couple of days of trend. It looks like we're going to get our 1 day pause. Could be interesting. Where could it get to? Look up and left. I usually look for a retest of highs. A couple of speed bumps in its way, but it should be $5 to $7 on offer. So it might last a few days. So I'm thinking about my TTE, my timeout, my target out, my exit out. I'm thinking about the target. Just look up and left. Could be interesting. It's not today. Could be tomorrow. Put it on your watch list. Come back tomorrow. Roku. Not worried about this one. It's not breaking, not doing anything exciting. I'll probably wait for a deep retracement. Oh, here we go. EFX. There's the gap. Oops. Little bit of expanding volatility. Gap. Pause. This is EFX. Gap. Pause. It's rallied 11%. So step number one, gap and percentage. Got both, number one. Number two, visual inspection. Broke through. This looks a lot like QCOM, our example. Looks a lot like QCOM, looks like our example. This could be interesting. So step number two, visual inspection, breakouts. Number three, trade the next pullback. And to be fair, we've already got it. It's already there. 190. So trade the next pullback. So step number four, I can start thinking about management. Timeout, target out, exit out. It's moved from 170 to 190. That's about $20. It could do another 20. So targets, where could it get to? Could do another $20 move. Could be interesting. This, if I've got to do something today, this is looking like a today trade. If it goes above 190, game on. So how do we find, let's go back to our slides. How do we find green light trades? So at the beginning of our session, we were talking about green light trading. How do we find today trades? We looked at finding gapping stocks, and we can use them for day trading. And they were some of the examples that I showed you earlier. We found Facebook exactly the same way. It gapped. It had a pre-market activity. It had good volume. So the same setup. So there, can everyone see the same setup? This is a 5-minute chart. This is the same setup. But the same setups can be used. Again, they don't all work out. Same setup. This one didn't work out. They're not all going to work out. Just be aware of that. They're not all going to work out. Same setup. It's not all going to work out. Risk management's tight. Same setup. Smashed it to targets. The same setups are there all the time. And the time frame doesn't matter. The only thing that matters is your objective. What's your objective? Like green light trading today for me was to try and open your eyes to the possibility that, well, if I don't have time to day trade, that's okay. My focus is day trading in the first hour of the day. I'm really enjoying doing it at the moment. And that's okay. But if you don't have time to, maybe you don't want to do it, and that's okay as well. Use the same process, the same production line to get you to your results. So if you want to swing trade for 2-3 days, if you want to swing trade for 4-5 days, a week, a month, that's okay. If you want to trade for the year, put a monthly chart on, put a weekly chart on. Same process. But what we've got, what I've been through today for you is structure, mechanical reason to start our production line, visual inspection to confirm. And what you saw me do more than anything was flick most of the charts that we looked at, reject. It meets one condition, doesn't meet all of them, reject. It's not breaking through support. It's not breaking through resistance. It's not doing anything new. It's not, oh, there it is. There's the trade. There it is right there. That was the trade that we stopped on. That was the one that we spend time with the visual inspection. It's not there. It's no. Ooh, there it is. There's the trade. That's what we're looking for. We've got so much choice as stock traders. We don't have to fanny around asking ourselves, where is the trade? We want the experience that we just had. And let me just get my chart back up. We want the experience that we just had. There's the trade right there. Now, I don't know if this is going to make money. I don't know if it's going to lose money. I truly do not know what's going to happen next. And no one knows what's going to happen next. But what I do know is that if I apply my production line process, I mechanically find something to look at every day. I visually inspect to see if it meets my expectation, my world view of what I'm looking for. And we spend some time looking at that before image and after image. What's your picture perfect scenario of a trade? What's your picture perfect scenario of a trade? Okay, let's dissect it. Where would be the best place to get in? Great, that's the before picture. What's the after picture? That's my expectation for afterwards. Great, how do we find it in the before state? This is what it looks like. So this for me was there's my trade. There is the trade. That's the experience that I'm looking for. There was no, because we knew what we were looking for, everything else was, leave it alone. There it is. And you're not going to have that every day. But we've got several stocks to look at over the next few days, the next few weeks even. And you're going to put them on your watch list. You're going to take them off your watch list. You're going to put them on. You're going to take them off. And then you're going to come across the today trade. This is what it looks like for me. And when I say today trade, it's like, I'm not waiting. I'm just waiting for the trigger. The trigger in this case for me is going to be 190. This looks awesome. And if it gets there today, then it gets there today. And that's what I mean by a today trade. It could get there today. Could be a today trade. What I could do, I could look at my 5-minute chart and trade the same pattern on the 5 minutes. So if I wanted to get a little tickle now on EFX, there's the same pattern. Gap, pullback, go. Let's do it. Right, folks. I've had a blast today. I really have had a blast. I hope you've enjoyed it. I'm probably not going to make this session public. I have recorded it. This was a great session. I'm going to put it inside my members community. So if you want to watch the replay of this, you're going to have to be a member. I give a lot of my time to serious traders for free. I've spent 20 years figuring this out. And if you want to spend the next 20 years figuring it out on your own, that's great. If you got everything you needed from today's session, then that's cool. Really made up. Really am made up. Sometimes you need a little bit of extra help. And if you need help, then I'm here. If you don't need extra help, that's cool. Have everything that we've talked about with my blessing, with my gift. My focus at the moment is the short-term trading. We've been through several examples today. Some make money, some lose money. The student wins. They can be replicated. Square was probably the best trade we've had this week. Facebook was very similar. We're net positive on the week. My focus is the same strategy, but just on lower timeframes. We do a few extra things to find those trades. So if you need help profiting from some of these short-term explosive movements, we have a live trading experience every day. If you want to learn in the smartest possible way, if you want to follow in the footsteps of someone who's already figured it out without having to make the mistakes over 20 years, you could certainly figure it out on your own. We trade one pattern. There's 9 variations. We have 9 different versions of this pattern. It's one simple basic pattern. You can learn this in quite literally 2 or 3 days. but certainly over the next 7 days in an hour a day. I go into more detail over the management system. I've mentioned it a few times today. Time out, target out, exit out. What do we do when we're in the trade? How do we know it's going the right way? How do we know when it's going the wrong way? What do we do when it goes right? What do we do when it goes wrong? This is the real secret to success, the management side of things. You're never going to be stressing over whether the market's going up or down. You'll make money if it goes up or down. You'll never spend hours flicking through chart after chart after chart. You saw how quick we did it. We zeroed in on the exact trade today. We knew exactly what we're going to do today. And you're never going to read through boring company reports unless you want to. Some people like doing it. I personally don't. But if you need help with all of that, and if you want help to build your trade confidence so that you can transition into the best possible trader that you can be, and you need some extra help, then send me a message. I don't know if what we do is right for you. But if you want to talk about it, just send me a message, phil@antivestor.com, and we'll talk about it. That's all I can ask. There's no hard pitch with me. I'm not going to try and convince you that my thing's the best thing since sliced bread. Maybe it is, maybe it isn't. Only you know the answer to that. But if you want to talk about it, let's discuss it. phil@antivestor.com. And if we can help you transition to become the best trader that you can be without the 20-year painful learning curve that I spent of trying to figure it out on your own, then that's great. Let's do it. So if you need help, send me a message and we'll figure it out together. And if I can at the very least point you off in the right direction, I'll always try and do that for you. Right, folks, that's it. That's my shameless promotion. Again, I do run a business. It isn't educate. If you want my personal attention, just like any business, you pay for it. But it's not right for everyone, which is why I ask you to send me a message and we'll figure that out together. So that was green light trading. Green light trading. Thank you for your time. Thank you for your attention. I really do appreciate that you spend an hour with me every week. And again, lots of regulars. Glenn, I appreciate you're a regular. Thank you for your feedback and your comments. Glenn's saying this is the best session yet. Send me a message, Glenn, on Slack, and I'll do you a favor because, you know, we've had a few back and forths. I'll send you the link and temporarily you'll be able to download this if you so choose to. So send me a message in Slack and it'll be available for 24 hours and you can have a copy of this if that helps you. Just a nice thing to do. Howard, hope you, first time I've seen your name, you may have been here before, but hopefully you enjoyed your session today. Ian, same thing for you. If you want to copy this, again, we go back a few years. So if you want a copy of today's session, let me know. And I think everyone else is in our member community, so you'll have access to it in about 20 minutes. With that said, folks, again, thank you for your time. Thank you for your attention. It really is appreciated. Have a wonderful weekend. Just take some time to enjoy yourself. There's been no point in history that we need to spend a little bit of time just to reflect and find some happiness. I think this year more than any other year that it's that way for everyone. So just try and find some time to enjoy yourself. Slack is the tool that I used. So I've got all my private channels. If you go to HTTP, if you go to AntiVestor, antivestor.com/Slack, that'll take you to the registration. I'm just going to pop it in the chat box. That should be, yes, if you go to antivestor.com/Slack, that will take you to the, you'll have to register. Again, it's a separate piece of software, but it just means that you can communicate directly with me. We've got a few free channels. Again, just click on my name and you'll be able to send me a direct message and I'll sort that out for you as promised, Glenn. And to be fair, if everyone's still here, again, I'm not going to make this public. If you want a copy of today's session, send me a private message. I don't think I'm going to release it to the masses. I'm not going to post it on YouTube for that matter. So I think we've had some extra stuff today. Consider it a Christmas gift, an early Christmas present. Send me a message on Slack and I'll get the copy over to you later. Right, folks, I think we've got that. It's a wrap. End scene, fade to black, roll the credits. Thank you for your time. Thank you for your attention. If you need some help with any of the trading strategies that we've discussed, send me a message, phil@antivestor.com. Send me a direct message if you want to talk on Slack. It's just a communication tool that I use, kind of like Messenger. is the best way of thinking about it. So if you want to do that, then great. Otherwise, I will see you all next week. Have a wonderful weekend, and I'll speak to you soon. Till then, bye for now.